was to account for the inventory tax that several years ago the legislature allowed for a business or individual who pays inventory tax to take the amount of that inventory tax as a direct credit to their tax liability to the state. What oftentimes happens is that the inventory tax is far greater than the income tax liability because we have such a low income tax liability for most people in the state. And as we eliminate or phase out the income tax at the individual level, that will affect pass-through entities like S corps and partnerships, which further makes this tax credit going away like a tax increase. Additionally, I have personal issues with the inventory tax as a type of tax because I think it puts our local brick and mortar businesses at a disadvantage to online retailers and people out of state. And when I look at the numbers of people who have, say, a package store in Hattiesburg and their inventory tax runs around $150,000 per year, that is a huge chunk of money that they are paying just to provide a service that we can have instant gratification of going to their store and buying. And so we disincentivize businesses from keeping inventory in Mississippi and we put them at a disadvantage. My intent was to offer a refundable credit of up to 75% of the gap between what they don't get to use, what the total inventory tax they paid, less the amount that they were able to use for a tax credit. We were unable to get the numbers to get an accurate understanding of what that would cost the state. So this committee substitute would request from Department of Revenue to use whatever avenues they can, either from county data or from income tax data, to provide to the Senate Finance and House Ways and Means committees by December 1st of this year, the 2025 tax data that would reflect how much inventory tax was paid and how much was used, and if they can classify that by entity so that we can try to parse out what's a C corp versus a pass-through entity. And that's what the committee substitute does.
Are there any questions on the bill? Senator England for a question.
Thank you, Mr. Chairman. Question for Senator Johnson. You mentioned wanting to get some more information on this from the DOR. Does this bill have a reverse repealer in it?
I don't believe that the committee substitute has a reverse repealer. We've requested this data. I think that they have some issues with tax lines. So we just asked them to provide it by December 1st for 2025 data. Okay,
so this isn't something that we get before we see this bill again.
I've been communicating with them for a couple of months, and I don't think that we'll be able to get it before the session ends.
Okay. Okay, thank you.
Any other questions on the bill? Senator McMahon, question?
I have a question for the presenter.
You recognize.
Thank you. Senator Johnson, you know, we've had some conversations in the past about the inventory tax, and I don't like the inventory tax. I think it's immoral. I think that what we're doing is the tax structure of this. We pay profit. You pay a income tax. You pay a profit tax. You've taxed all your labor. Everything has been taxed. Your property tax. Everything has been taxed. And then you're being taxed on the inventory that's in a building perpetually. Chairs, tables, bookcases, everything. And I've never liked the inventory tax. I don't appreciate it. I would like just to eliminate the inventory tax. What do you think about that?
I agree with that premise. I think that is problematic because it's the property taxes, including ad valorem or real, are the only sources of revenue for most counties in the state, if not all counties. And I think that we can drastically hurt their budgets by just eliminating the tax. I think while I would love to see it go away, I don't know that that's something that we can work out and put so many counties in a bind on the money it would cost them.
You know, we continue to see property taxes, ad valorem tax go up across the state. The inventory tax is an unfair tax. And I would really like just to completely eliminate it.
Well, like I mentioned earlier, I don't like the inventory tax or the personal property taxes on your business equipment or furniture. I think that we're almost penalizing people for doing business in our state. And I would love to see a different way of tax, but I think that we would have to give that opportunity to replace that revenue before we can eliminate it.
I know there's a reverse repealer in here, and I'd like to have a little further conversation about that and maybe have a amendment that would be favorable to accomplishing eliminating the tax completely.
Okay.
Thank you. Thank you, Mr. Chairman, for taking my question.
Thank you. Any other questions on the bill? Senator Sparks for a question.
Thank you, Mr. Chairman. I just want to make sure, because there's a lot of stuff being discussed. The committee sub just directs DOR to give you information so that you can make future decisions. Is that fair?
That is correct, yes.
Okay, thank you.
Thank you. Any further questions? For a motion?
Motion is title sufficient, do pass committee substitute.
Motion is title sufficient to pass committee sub. All those in favor say aye.
Aye.
All opposed? The ayes have it. The ayes have it. That bill will be reported out. Next, Senator Boyd, I'm going to recognize you for Senate Bill 2868. This is a committee sub we're working off of.
What this does is, ICHRA, if you're not familiar with the term, is individualized coverage for health reimbursement arrangement. It's a federally authorized employer health benefit that allows employers to reimburse employees on a pre-tax basis for individual health insurance premiums and certain medical expenses, instead of offering that traditional health plan. They were created by federal rule in 2020 to expand access to employer-supported health benefits, such as particularly for small and mid-sized employers that are unable to offer or sustain group coverage. Several states now are in the process of looking at state-level tax incentive to encourage the adoption of ICHRAs and to increase employer participation in health insurance coverage, but also to be able for these employers to maintain some budget predictability. The reason for this and what this is really designed to do is for small employers, they face kind of structural barriers in being able to offer health insurance. Many of you who are small business owners know this. So what this group health insurance, when you get it, it can be expensive and it's volatile. Annual premium increases are very difficult to predict. And it makes it very difficult for you as a small business person to be able to plan, even though you want to offer that health insurance coverage. The employers must select one plan for an entire workforce, usually on that plan, even though their healthcare needs vary greatly. You may have young employees who need very little health insurance, where you may have older employees that need a great deal more health insurance coverage. And so it makes it difficult for that small employer. Oftentimes our employers are faced with offering no coverage at all or offering a plan that they really don't know the volatility of the market on. So as a result of that, ICHRA was created. It's an employer-funded account-based health benefit with 3 core features. The employer sets a fixed monthly allowance. The employers have to purchase their own health insurance, on or off the ACA marketplace, or Medicare if it's eligible in other states. And then the employer reimburses premiums, and optionally certain medical expenses are tax-free up to that allowance. The employer does not sponsor a group insurance policy. What it does is it's a defined contribution approach to health benefits rather than a defined benefit approach. So the employer, for example, if they want to offer $300 a month for this health insurance plan for you to go purchase it, that's the way it really works in doing this. And as you can imagine, that helps small businesses really get into the market and being able to help with that. many of your small restaurants and different things like that. This is a good option for them to be able to offer those benefits. The ICRAs under federal regulations were finalized in 2020, and they are to expand employer participation in health benefits, to integrate individual insurance markets with employer contributions, to provide a compliant alternative to traditional group plans. And then it preserves employee choice while maintaining those federal guardrails that they have to maintain. One of the things to know is what it doesn't do. It does not eliminate employer-sponsored insurance. It does not replace the ACA or its consumer protections. It doesn't require employers to offer coverage, and it doesn't change insurance underwriting rules, and it doesn't guarantee lower premiums. It's simply an alternate benefit structure. So many states are considering ICRA tax credits to encourage small business employers to offer some form of a health benefit. It lowers the barrier for entry for employers currently offering nothing by giving this credit for the first 2 years. And then it supports workforce retention, recruitment, and it maintains some budget predictability for those small businesses, which we all know is very important. Indiana introduced this in their tax year 2024, and they have been doing this. We don't have data from them yet because it was just introduced in 2024. This legislation that you have before you is very similar to what you see in Indiana. So just kind of under this law, since this is, most of us have never heard anything about this, I'm going to go into a little bit more detail. The employer has to have fewer than 50 employees. The employer must be subject to the Mississippi income tax. The credit applies against the employer's state income tax liability, and it can't exceed that liability. The employer must offer an individual, the ICRA arrangement in lieu of the traditional employer provided health insurance plan. So employer can't have ICRA and a traditional health insurance plan. The covered employees is an employee for whom the employer contributes to an ICRA. There's some special situations in here. Employers that did not offer any health insurance can qualify easily because there's no prior employer contribution to compare against. So any positive ICRA contribution in that way will satisfy that eligibility requirement. To claim the credit, the employer's contribution must meet a maintenance of effort test. Specifically, the employer's contribution must equal or exceed the level of benefits they provided the prior year. So the employer can't suddenly take advantage of this and then decrease their amount that they were spending on their contribution with that. The amount contributed per covered employee to the employer's previous health insurance plan during the prior year. In practical terms, this means employer can't reduce its benefit spending simply to obtain the tax credit. And that's what we want to make sure we prevent. The employer must maintain at least that same level of financial commitment to the employee's health insurance as it has previously. The first year credit, an employer may maintain a credit of up to $400 per covered employee for the first taxable year in which the ICRA is offered. The second year, the employer may claim a total of $200 per employee if the ICRA continues to be offered. So it would just be for 2 years. And again, this is just a way to try to encourage our small businesses to really start helping with this and moving with that. The credit amount is capped per employee. Even if an employer contributes more than $400 per employee annually, the maximum credit is only $400 in year 1 and $200 in year 2. The total amount of credits approved statewide, I believe, have we changed this to $1 million, Mr. Chairman?
Ma'am.
The total amount of credits provided statewide is limited to $1 million. Have we changed this in the committee sub?
Yes.
Okay, per fiscal year. So this would be, we would be looking at this, we're going to commit $1 million in tax credits, and this would be looking at it this way. The credits are approved in the order filed, and if the credit exceeds the employer's tax liability for a given year, unused amounts may move forward up to 10 years. the reporting requirements are that employers claiming the tax credit must report to the Mississippi Department of Revenue every 3 years after claiming the credit, and the report must include whether the employer continues to offer the ICRA and details regarding the benefit level. This will help us in evaluating if this program was successful in making sure in trying to get more small businesses to offer this. And this will give us good reporting data to know if this was a good investment or not for us as the state. Anyway, in kind of closing with this, the proposed structure really benefits those small employers trying to start offering some health and benefit. It helps the employers maintain existing benefit spending while transitioning to that ICRA cost, gives them some fixed amount of what they think it's going to cost. And that is an explanation of the bill, and I apologize for being long-winded in this.
Like somebody wanted to just read the bill.
Yeah.
For questions on the bill, Senator Kirby for a question. Senator Kirby, you recognized for a question?
Thank you. Yeah. I see what you're trying to do and I like what you're trying to do, but I got a question. The question is, there are a lot of small businesses that have what's called a 2 to 10 small group. And the only way that some of those individuals can get insurance is through that small group. So what does it do to small businesses that have to have a small group?
Well, this wouldn't touch their plan. I mean, this is for your small businesses that have to do that and are doing this. This would be something in addition to, like, this would be another way for small businesses to enter into this market.
So
If I'm understanding your question, Senator Kirby.
yeah, well, I mean, groups usually go like 2 to 10, 10 to 100, some are 10 to 50 with some companies, and then 50 or more, 100 and more. But it's the small groups that I worry about where you have 3 or 4 employees and you have somebody that's in bad health. And I was worried about that person in the small group, but you're saying they can still do that. It's not going to affect that.
The employer can still continue to do the policies that they're doing. This would just be, this would be for the employers that are not really offering anything. This would be hopefully a way for them to get into the market with some level of predictability.
So you don't really see any way it could hurt a small business, this
I
bill?
don't think so.
Okay, thank you.
All right. Senator Rhodes for a question.
Thank you, Mr. Chairman. My only question is, it says in here several times that it is for reimbursement of health insurance. Is there any thought about the health coverage plans like the MediShare or the Farm Bureau Health Plan or Liberty Health Share, these share plans that people are using now to save money? Would they be eligible for this?
This would, Senator Rhodes, I'm going to be real candid. I don't know enough about those programs to probably answer that question correctly. This, though, would allow people to purchase this in the private sector as well. So if I gave the senator $400, then she would be able to purchase in the private market. So if those are plans that are available on the private market, this would increase, obviously, their market share of people who could purchase on the private market. Is that what you were asking? Okay, thank you.
Any other questions? All right, seeing none for a motion. Motion is title sufficient to pass committee sub. All those in favor signify by saying aye. All opposed? The ayes have it. Thank you, Senator Boyd. Next bill, Senate Bill 3110. Recognize Senator Taylor.
Thank you, Mr. Chairman. Members, this is a very simple bill, but it is very crucial for our rural hospitals. This is Senate Bill 3110, tax credit provided against income and ad valorem taxes for voluntary cash contributions to rural hospitals. This is a committee sub. If you look on line 11, we're going to change that to not exceed $100,000 per individual, and no hospital is going to be able to receive or exceed over $1 million. And then if you look on line 37, there's a change. We're going to change that from 50% from 75%, excuse me, to 50%. So this will allow individuals in your communities to be able to give a cash contribution to a rural hospital, and it will then take away from their tax burden. Mr. Chairman, that's the explanation of the bill.
Okay. We're going to move to adopt the committee sub, and then we'll recognize your amendment to change that one item there. Are there any questions on the bill? All right, seeing none, for a motion to adopt the sub.
Committee sub, title sufficient, do pass.
Move to adopt the committee sub.
Yeah, we're gonna move to adopt the committee sub.
You heard the motion. Move to adopt the committee sub. All those in favor signify by saying aye. All opposed? The ayes have it. Now for your amendment is to change on line 37 from 75% to 50%.
That is the amendment.
All right. Any questions on the amendment? Not on the amendment? Do you have a question on the amendment? Senator? No. Okay. Are there any questions on the amendment? All right, seeing none for your motion.
Title sufficient, do pass. I'm gonna adopt the amendment.
All right. Senator moves to adopt the amendment. All those in favor signify by saying aye. All opposed? The ayes have it. All right, we're back on the bill. Senator McMahon, you have a question?
I do.
You recognize?
Thank you, Chairman. Well, I read the definition of what your rural hospital is. Why are we limited in this? Why can't we open it up and allow anyone that wants to make a contribution to any hospital to be tax deductible?
This bill just pertains to the rural hospitals, and that's just the way it was written to be able that they can receive these contributions.
There was a definition in Senator Bryan that they adopted in public health on a definition of rural hospitals, I think is what we used.
Yeah, that's why I was drilling down to. Okay, thank you.
All right. Any other questions on the bill? Seeing no questions or motion?
Title sufficient, do pass. Committee sub.
All right, all those in favor signify by saying aye. All opposed? The ayes have it. Thank you, Senator Taylor. Next is Senate Bill 3111. Recognize Senator Johnson to explain.
Thank you, Mr. Chairman. This bill allows for brokers, wine brokers to donate up to 10 cases per year to a charitable organization where it is exempt from any state taxes. And so where that would come in on alcohol, there's excise tax, markups, and sales tax. This would allow for them to purchase it at whatever cost the cost is and donate it to someone, a charitable organization. This could be used for an event or auctioned by the charitable organization, but it just exempts. And I don't believe that senators qualify for charitable status. But that's an explanation of the bill.
Any questions on the bill? All right, seeing none for a motion.
Motion is title sufficient, do pass.
Motion is title sufficient, do pass. All those in favor signify by saying aye.
Aye.
All opposed? The ayes have it. The ayes have it. Next on the agenda is Senate Bill 3116. This is a bill that basically adds it simply extends the Mississippi existing renewable fee and lieu authority and adds battery energy storage systems, BESS, as an eligible project under both the standard and enhanced fee and lieu statutes. That was not considered a category, and it is a renewable energy product. So we just are adding it as a category for consideration. Some of these projects they have to be over $100 million. I think a couple of them are significantly over that are looking to go into the state right now. So that is an explanation of the bill. I'd be happy to yield for any questions. Seeing none. Motion is title sufficient, do pass. All those in favor signify by saying aye. All opposed? The ayes have it. That bill will be reported out. Next is Senate Bill 3124. This is a bill that kind of helps to tighten up and to expand on the Pregnancy Resource Center tax credit. There's a $10 million cap currently that is in statute, and We're trying to open it up for more people to donate. So right now, it's just a business can donate to it. So we're opening it up for individuals to be able to donate. And it also tightens up some of the requirements of what is considered a pregnancy resource center to make sure they maintain a state physical office, a clinic, maternity home, or regularly answered dedicated phone line. It just kind of tightens up the definitions of what a pregnancy resource center is. And it also speaks to the recertification, starting on line 88, talks about the qualifications and the statements that the organization does not receive more than 50% of the total revenue from federal, state, local government agencies, and in the prior fiscal year expended 70% of any contribution received under this section to serve clients who are full-time or part-time residents in the state. That is an explanation of the bill. Believe that there is, that's an explanation of the committee sub. Are there any questions on the committee sub? Seeing none, for a motion. Motion is title sufficient to pass committee sub. All those in favor say aye. All opposed? The ayes have it. Next is Senate Bill 3227. Recognize Senator Johnson to explain the bill.
Thank you, Mr. Chairman. This bill is similar to one that was passed after Hurricane Katrina. This would be for new market tax credits, and it would allow the state credit to be expanded from the current definition under federal guidelines to include the disaster area, which I believe we'll call the recovery zone due to the winter storm in Mississippi. And that will be expanded for a period of 1 year to help support businesses in those areas. And that's an explanation of the bill.
Are there any questions? Senator Blunt for a question.
Thank you, Mr. Chairman. Certainly want to do all we can to help what has happened with the disaster in North Mississippi. And as this bill moves forward, I would just ask you to consider, you mentioned Katrina. When the GO Zone legislation was passed, it included, as a result of, in an effort to help rebuild after Katrina, there were massive tax incentives that were passed, obviously for South Mississippi, but the area that was included was also Madison County. And much of the commercial and office development that we now see in South Madison County benefited from tax incentives that were provided to help rebuild the state after Katrina. And I see in there that it's limited to the counties that are named in the emergency, the disaster list. But I think we need to be precise in this. We want to help, thank you. We want to help the counties that obviously need the help. But sometimes these maps, as we saw with Katrina, that they're slightly imprecise, and you can have unintended consequences when you pass a bill just to help people who are suffering from the ice storm, and you can do something that maybe is not related to the ice storm if you're not targeted in what you do. I think we saw a lot of people do things in South Madison County in the name of Katrina recovery that had a detrimental impact to other places in the area. So I just, as we move along, we want to be, I would just ask you to be careful about that because.
Thanks,
Thank
Senator Blunt. And we certainly do. Let me make a note on there was not a similar piece of state legislation after Katrina. It was a federal designation, which was different. This specifically says on line 330 that it will be used for recovery from the state of emergency referenced above, which is the winter storm. You see the counties that are there. So it is limited to storm affected businesses, and it is for a period of 1 year. So it's just a very short term expansion of those designated areas. Thank you.
Thank you. Any other questions on the bill? All right, for a motion.
Title sufficient, do pass.
Title sufficient, do pass. All those in favor signify by saying aye.
Aye.
All opposed? The ayes have it. Next on the agenda is Senate Bill 3228. This is the skills training tax credit that we've enacted. we've had a pretty good response. We want to try to see if we can open it up a little bit more. We've moved it from 1 million to 2.5 million to see how other businesses in the state will try to take advantage of the skills training. And skills training just means an employer-sponsored training by an appropriate community junior college or training approved by such community or junior college that enhances the skills of improved job performance. And if the employer provides pre-employment training, a portion of those pre-employment training that involves skills training will be eligible for the credit. Been pretty successful so far, and it moves the repealer back to 2030 for the program. That is the explanation of the bill. I'll be happy to take any questions. All right, seeing none for a motion. Motion is title sufficient do pass. All those in favor signify by saying aye. All opposed? The ayes have it. Next is Senate Bill 3229. This bill is another attempt to kind of work with some of our folks that are affected from the storm. This is a way that is going to help lower the ratepayers' utility bills going forward. Obviously, a lot of money has been expended in recovery for our utilities across the state. Currently, our co-ops are able to access low interest rural loans to help with recovery cost. Energy is not eligible for those, and what they are entitled to is cost recovery for damage. And so in order to help alleviate the cost on ratepayers, this is an effort to put forward a revenue bond package that would allow them to access lower interest rates, and it removes it from revenue to help also lower the cost on our ratepayers. With state bonds, they could look at about $1.50 a month for about 15 years without going to conventional financing. It's almost over a 30-year period, and it's $2.97 a month. So this is a measure that we're taking to help lower the cost for ratepayers. The revenue generated by the billing will pay the bonds off, and Section 4 just lays out how the electric utility submits the system restoration cost to the Public Service Commission, and how the Public Service Commission audits and certifies those costs and issues a financing order. The utility submits the financing order to the State Bond Commission, and that's the Bond Commission issues the system restoration bonds. And it also speaks to how the restoration bonds will be serviced through the system restoration charge. Section 8 talks about the system restoration property is pledged to secure, that's the charges that are collected by the utility, is pledged to secure the system restoration bonds. And Section 9 creates a special fund in the state treasury designated as the Mississippi Severe Winter Storm of 2026 Electric Utility System Restoration Fund to deposit the funds of the proceeds of the bonds. And it also, how the funds will be distributed at the direction of the Public Service Commission to the designated electric utility to pay system restoration costs incurred from the storm. And Section 10 creates a sinking fund in the state treasury to provide for the payment of the principal and interest on the system restoration bonds. It lays out how the electric utility will collect the charge and deposit those funds each month into the sinking fund. It requires that other eligible funds received by the utility or state for the restoration activity related to the storm shall be deposited into the sinking fund, and it provides the retirement of the bonds once fully paid, and provides for notice to the Public Service Commission to suspend the charge for the utility customers. That is an explanation of the bill. I'll be happy to take any questions if there are any. Are there any questions? All right, seeing none for a motion. Motion is title sufficient do pass. All those in favor signify by saying aye. All opposed? The ayes have it. That bill will be reported out. And last, do we have the Senate Bill 3191? Y'all have a copy of it? All right, I'm going to recognize Senator Johnson to explain the bill.
Thank you, Mr. Chairman. This bill has two purposes. I've had some retailers reach out to me about being charged, if they charge a credit card processing fee to the customer to offset their cost. They are oftentimes being charged sales tax on that amount. There's also some credit card companies that would prefer for them to offer two prices on every product, a price and a cash discounted price. This bill would simply state that for Mississippi purposes with sales tax, that the gross proceeds of sales shall not include the amount of any debit card, credit card, or other processing or interchange fee charged for an electronic payment transaction. What that would mean is if they charge an amount to the customer to offset that cost that they are being charged, it will not be included in their sales price, which also means that they will not be paying sales tax on that. That is what the bill does. We did have an opportunity to do some cleanup language with where there was inconsistent shall or do. We made it all corresponding at a couple of places with shalls, but that is an explanation of what the bill does.
All right. Are there any questions on the bill? All right. Senator Sparks for a question.
Thank you, Mr. Chairman. If they're charging a fee in excess of what they're actually being charged, they're still going to pay tax on that because it's going to show up on their profit and loss. Is that not fair?
That's correct. And we thought about putting a little bit of leeway because it's if the credit card processor does not automatically put that charge on, it's impossible for them to know because they could float. I hope that DOR shows some discretion and a little bit of leeway in case if they charge a 3% and it's 2.8, that we would call that equal. But if they charge 5% and they're being charged 2.5, yes, I think that they should be charged the gap.
But they're going to have to claim the gap because that's revenue that comes into them. I just wanted to make sure they're still going to be taxed on it, just not a sales tax. It would actually flow through in their profit and loss statement.
Well, that's correct. And this would certainly be on their profit and loss. This would just be sales tax.
Thank you.
Senator Kirby for a question.
Thank you, Mr. Chairman. Quick question. Is it legal for a restaurant to charge a fee? They don't say credit card fee, but just a fee, even when you're not paying by credit card to cover their credit card charges?
I would have to verify that, but I am not, I think they can charge you any fee they choose to, and whatever you're willing to pay.
Okay, they do it.
I
You're paying cash, some of them. Okay, thank you.
we can certainly check on that.
Thank you.
If there are no further questions, my motions tile sufficient do pass.
All right. Any further questions on the bill? Seeing none for a motion?
Tile sufficient do pass?
All right, motion is tile sufficient do pass. All those in favor signify by saying aye.
Aye.
All opposed? The ayes have it. Motion to rise and report. All those in favor say aye.
Aye.
All opposed? Ayes have it.